All right, let's get right into it. We're going to break down something pretty wild, how one single conflict in one tiny stretch of water can literally cause a massive crisis for the entire global economy. And, when an analyst says something like this, they're not exaggerating. This one quote really just captures the massive scale of what we're looking at here. This isn't just, a little dip in the market. No, this is a full-on physical stop to the flow of the world's energy.
So what does that disruption look like in numbers? Well, here it is. 20 million barrels of oil and other products every single day just stopped. But here's the really scary part. Even when you account for, every other possible source, the world is still short about 10 million barrels a day. That is a massive hole, and right now, nobody has any idea how to fill it.
Okay, so how on earth did we get to this point? Well, the whole story starts in what's basically one of the most important stretches of water on the entire planet. We're talking about the Strait of Hormuz. The best way to think about it is like a critical artery for the global economy. Before all this, you'd see 100 ships passing through here every day. Now, it's just a handful. Iran basically holds the off switch, and they just flipped it. And things escalated fast. A U.S.-Israel strike hit Iran, and the response was almost immediate. They shut down Hormuz. But the problem is, it didn't stop there. Then, Houthi rebels, who are backed by Iran, jumped into the fight. And just like that, a second crucial shipping lane, the Bab al-Mandab Strait, is suddenly under threat. That puts another huge route for Saudi oil at risk, a real double whammy.
So as you can probably guess, the very first place this whole mess showed up was in the global markets. And the reaction wasn't just fast, it was brutal.
Just look at this. It's kind of staggering. The price of Brent crude oil, which is the benchmark for the whole world, didn't just go up, it shot up by more than 50%. We're talking from around $72 a barrel to almost $116, practically overnight. This is actually on track to be the biggest single monthly jump ever.
And of course, that kind of panic doesn't stay in one place for long. It's spread like wildfire. Investors got spooked by all the uncertainty and just started dumping stocks. Asia's markets got hit especially hard. South Korea's main index dropped almost 5%. Ouch! Okay, but here's a question you might be asking, and a lot of people are. The U.S. is the world's biggest oil producer, right? So why on earth are consumers in America seeing prices go up at the pump because of a crisis halfway around the world?
And here's the simple but really important answer. It's all one giant global market. They're all connected. So even though the U.S. pumps out and exports tons of oil, the price you and I pay for gas is still directly tied to that global benchmark price. No country's an island here, nobody's immune.
So yeah, the effects are definitely global. But the immediate pain? Well, that's not being shared equally at all. If you want to see where this crisis is hitting the hardest and the fastest in the real world, you've got to look to Asia.
And this chart right here shows you exactly why that is. It's pretty straightforward. A whopping 70% of all the energy that comes out of the Middle East, it's headed straight for Asia. So it makes sense, right? When you turn off that tap, Asia is the very first to feel it. It's just simple, brutal math when it comes to geography and trade.
Let's make this real with an example. Take South Korea. They're dealing with a huge shortage of something called naphtha. Now, this isn't just about fuel for cars. Naphtha is a key ingredient for their massive petrochemicals industry. We're talking about the stuff they use to make plastics, packaging, parts for cars and electronics, everything. The shortage is so bad it's threatening their entire manufacturing supply chain. They're so desperate they're not trying to get emergency supplies from Russia.
So with this crisis just getting worse and worse, governments all over the world are scrambling. They're being forced to act, rolling out all kinds of emergency measures just to try and soften the economic blow. And believe me, some of these measures are pretty drastic. You've got countries like Sri Lanka and Thailand actually rationing fuel and telling people to cut back on their AC. In Australia, they've slashed the fuel tax in half for a few months, and some states are even giving out free public transport, just begging people to leave their cars at home. At the same time, behind the scenes, there is a ton of frantic diplomatic action. The G7 finance ministers are holding emergency meetings. The UK pulled together a summit with 40 different countries. Everyone is desperately trying to figure out how to work together to stop this economic chaos from just completely spinning out of control. But, and this is a big but, here's the cold, hard truth. As one reporter put it, for all the meetings and all the talking, there's really very little they can do. Why? Because the root of the problem isn't financial, it's physical. The strait is blocked. That's it. And that brings us to the really big, critical question. What happens next? What are the long-term consequences? Analysts are starting to look past the immediate chaos and are asking what kind of permanent scars is this crisis going to leave on the global economy? So let's just circle back to that number for a second, because it's so important. The world is missing 10 million barrels of oil every single day. A shock of that size, it doesn't just fade away. It forces real, fundamental change.
And experts are already predicting two major long-term changes. First, there's this wonky economist term called structural demand destruction. It sounds complicated, but it's actually a pretty simple idea. When prices stay crazy high for a long time, people and businesses have no choice but to find permanent alternatives. They'll finally buy that electric car, or a factory will retool to be more efficient. And here's the key. Some of that demand for oil and gas, it's just gone, forever. Then the second thing is, once the dust settles, every country's going to rush to build up their emergency fuel reserves, to protect themselves from the next shock. And ironically, that rush to restock is going to create a whole new spike in demand.
So we're left with this pretty sobering thought. All those buffers we had, the emergency reserves, the oil that was already on its way in tankers, they're gone. The world is basically flying without a safety net right now. Analysts are throwing around numbers like $170, maybe even $200 a barrel if this keeps up. And that leaves us with one heck of a question. What does a $200 barrel world even look like?